You're listening to the WBT Podcast with Michael Lodge. Listen to all of our podcasts at www.wbtpod.com. Stay informed. Let's get started.
This is brought to you by Lodge & Co., a business and tax advisory firm where your success is our goal. Call us today toll-free at 888-681-1518 or visit us at www.lodge-co.com and learn more about what we can do for you. Lodge & Co., your source for sound business and tax services.
And welcome to the WBT. This is Mike Lodge, and we're talking today about taxation. And let me tell you, over the last few days, I've been kind of pissed off, and I've been talking about politics. So enough of that, because if you get so involved and so hooked on this political issues that you see going on around you, you become nutso. So today we're getting back to taxes and business and everything that I know about. I've been talking over the last few weeks about looking at your W-4s and talking to your HR and payroll and also your tax advisors on redoing your W-4s, which tells your payroll departments how much to take out of it. I've been telling you guys to double check that because the tax rates have changed. But I also need to talk to those of you who are retired, because the IRS has a message for those of you who have gone into retirement. And the message is, make sure you're paying enough federal income tax, because the Tax Cuts and Jobs Act of last December, it changed the income tax calculations for most filers. And employees aren't the only ones who need to double check their withholding, making sure that they are withholding the right amount. Tax rates have changed. The tax laws have changed. Under the GOP tax bill, it lowered the top individual rate to 37% from 39.6%. And the income brackets dropped slightly by about 3%. So this means that really on average, most retirees will likely see a decrease in tax liability and slightly less, although it varies by individual circumstances. So you have to look at your circumstances and talk to your tax advisor about this very issue. You don't want to get to the end of the year and find out, oh, I owe taxes. And then you don't like your tax accountant, and it's a sticky wicket, I tell you, when you get to that point. So retirees who receive monthly pension income or annuity checks may well need to increase or lower the amount of taxes they pay. While most retirees prefer withholding taxes from each paycheck to give Uncle Sam his due, those who choose to receive the full amount in each check and then make estimated payments to the IRS must do so 4 times a year by the quarterly deadlines. The third quarterly deadline was September 17th, and the next one is January 15th, 2019. So if you've missed that, you need to really talk to your tax practitioner. I mean, I keep telling you this, and I want you to get it into your head. The tax laws have changed. The tax rates have changed. Your W-4 needs to change to get it into your payroll department. So withholding too much from each check could result in an outsized refund, while withholding too little could mean you owe the IRS next spring. Make sure you don't have a large balance due, because it's possible you could be penalized for underpaying your estimated taxes. The easiest way to simplify your tax payments and get back to enjoying retirement is to use the IRS online withholding calculator if you want to do it yourself, which incorporates the new tax law rules and changes. Like employees who receive wages, retirees can use this tool to estimate the total income deductions and tax credits for 2018. Retirees should treat their pensions and annuity checks, like income from a job by entering the payment amount and how often they receive them. Based on this information, the calculator recommends the number of allowances each recipient should claim. You can change your withholding at any time by contacting your the payer and submitting a new, what is called, for those of you who are retired, a W-4P form. For those of you who are working, it's a W-4. If you haven't done it yet, gosh, you are really out of touch, and you need to get this done. Honestly, if you go to your tax practitioner and he says you owe taxes, do not blame it on the tax practitioner. Blame it on yourself, because you have not corrected the tax withholding on your pensions or on your W-2 wages. So get it together, guys. Let's be proactive on this. You still have a little bit of time to correct this, but you need to sit down with your tax practitioner and go over your stream of income. And if you filed a W-4 and what the percentages were that you took out, you need to revise it, okay? You cannot let this go on for very long. Otherwise, let me tell you, when you get to those penalties and interest, it adds up very quickly. So be proactive. Talk to your tax practitioner or call our office at 888-681-1518, extension 0, and ask for Matthew Shin, and he can help you out with that, looking at what you should be taking out. So get it together, guys. Tax time is just about here. We only have another 3.5 months, and tax time is going to be here. Seems like we just did it, right? Well, I'm sorry, but 12 months go a lot faster when you're getting older. I'm telling you, it just seems like January 1st was here. We were preparing tax returns, and now here we are again looking to prepare more tax returns. So, come on, you guys. Let's get this together. Call our office at 888-681-1518 or go to our website at www.lodge-co.com. I'll talk with you soon. Have a great day. Bye-bye.
Thank you for listening to the WBT with Michael Lodge. Join us again tomorrow as we explore more about business and taxes. Follow us on iHeartRadio and go to our podcast website at www.wbtpod.com and listen to all of our podcasts and read our blogs.
World of Business and Taxes on WBT.
This is brought to you by Lodge & Co., a business and tax advisory firm where your success is our goal. Call us today toll-free at 888-681-1518 or visit us at www.lodge-co.com and learn more about what we can do for you. Lodge & Co., your source for sound business and tax services.